As we head into the new week, the big issue of the day for Tesla investors, what will weigh more heavily in the early week? Tesla's numbers on Tuesday are FSD that will soon lead to massive additional sales of the product itself, and then on to RoboTaxis, incredible earnings. So unless Elon puts out an Optimus video tomorrow or Tuesday, I'm pretty sure that those two issues will be all that is in play for the first few days of the week. What do you think? Let me know in the comments below. So James Dauma was absolutely giddy. And if you know James, that is not his default emotion, but he was giddy on a very long video he just did with Farzad and Hans. He was posting his analysis of the profit potential for RoboTaxis. He put this thing up on X, as Farzad's channel. I'm going to share it with you. I think you'll soon understand why he was so giddy. So James starts off his post. He says, operating costs from a combination of sources get us to 28 cents a mile for a $25,000 retail vehicle, or about 42 cents per fleet mile, including deadheading costs. So you can take either one of these, and it also depends on how many years you take to write the vehicle off. So he's got tires sitting at 2 cents, power sitting at 4, vehicle cost at 20,000, vehicle life miles, he's only putting 50,000. See, that could change everything because your depreciation would go from, let's say, 4 cents to 2 cents. Insurance maybe won't be 5 cents a mile. It's very likely that insurance could end up being free, but we'll talk, that's a whole nother story. But for now, we'll keep it at 5 cents. Maintenance, cleaning, operations, and then total cost per mile, including a 50% deadheading cost, you've got it at 42 cents. Okay, so then he says, okay, we take this from the individual fleet vehicle standpoint. Each vehicle is driving 55,000 miles per year and generating about $100,000 a year after operating costs. So a $20,000 cost vehicle with a 10-year life has a present value of $800,000. So this is what Elon's been talking about all this time, is that you've got an $800,000 over $800,000 of value if you're basing it on a 10-year turnaround. He says overhead miles per billable mile, 0.5 cents, then miles per year per vehicle, 55,000, revenues at $2.40 per mile average. Now we'll see where he comes up with that. And then cost per mile, 28 cents, deadhead cost, add the 14, cost per mile, including the deadhead, 42 total, and then operating income at $1.98, yearly profit $108,900, over the total use of the vehicle, $840,000. He says during off-peak, now these are all from Chicago statistics that are widely available on rideshare. Apparently, this is just public information. During off-peak, outside of Friday and Saturday evenings, idle vehicles are pre-positioned to allow for reliable 30-second response times. So this is not what is happening now. Obviously, you've taken an Uber or a Lyft. You know it doesn't come in 2 minutes or 1 minute. But he's suggesting in the future they could do this, and if they were able to do that, it would make it a much better situation for riders, and they would be much more inclined to use it. This level of service can be provided in Chicago at current rideshare rates, generating $1.25 billion in revenue and $1 billion gross profit per year, 80% gross margin, using Tesla's FSD rideshare model. But Chicago is only about 1% of the urban population. Extrapolating to the whole U.S., you get 1 million vehicle fleet, 1 million units, 1 million vehicles for your fleet, generating $100 billion in gross profit. Naturally, there will be a competition, regulatory barriers, fights with incumbents, and pushback from various quarters. So actual results may vary, perhaps substantially. And of course, the other way this could vary is that more people might decide to use the vehicles. He had a lot of conversation in that same video about what price variability might mean. He thinks that it won't be that big a deal. People will be willing to pay $2.45, which is what they're paying now on average in the Chicago area. We saw the other day in a video I did where it could be as high as $4, like in New York. It could be much lower, say down in some parts of Texas. Anyway, he says, looking up the potential for the underlying business is extraordinary. That's why he was so giddy. Looking even further ahead, he said a cost floor of 40 cents per mile allows for expansion beyond current rideshare demand, potentially commoditizing half or more of all the vehicle miles in the U.S. So he says if you get it down to the cost down to 40 cents, and then you lower the amount of dollars that you're charging per mile, then you could be getting maybe half of the total miles in the United States. 50% of U.S. vehicle miles with 60 cent revenue and a 40% cost per mile is 250 billion of profit on 750 billion of revenue. That's a pretty big industry. All right, so know what you think about that. You can go look at his Twitter, or you can go back and look at that Farzad video if you want to hear more about that. We've got from Yashu Sharma, and he's at his handle is Hey It's Yashu. He says peak RoboTaxi company valuations. So Waymo at one point was valued at 175 billion. That was in 2019, and that was based on 3 cities. Now that may be a little bit of a stretch. People weren't basing it on totally Waymo only being in 3 cities. It was based on the fact they were had some kind of operation in 3 cities, and they were valued at 175 billion. Cruise, which is valued at nothing now. Anyway, I don't know what they're valued at now, but they were valued in 2021 at 30 billion based on operations in 5 cities. He says the value of Tesla, energy, auto, FSD, robotaxis, but insurance and everything else that they do is today valued at about 550 billion. He got Waymo was 175 billion just for 3 cities of operations back then. He says there are 6 million Tesla cars all around the world that could receive an FSD update over Wi-Fi and shortly thereafter be in the robotaxi business. So there you go. What we've been saying all along, it's a secret. We're supposed to be quiet about this and just keep buying shares until the rest of the world catches on. So what might happen Monday and Tuesday? Will people be paying attention to what I just went over, or will they be paying attention to the number of cars that might be shipped? Here's something from Barron's. They said the most recent estimates coming from the street are in the 425,000 range. Wedbush analyst Dan Ives says anything above 420,000 would be a relief. And he says investors are bracing for a number that could come in below 410,000 units. He says, he goes on to say, it probably isn't going to be that bad. On Friday afternoon, Tesla tweeted to say it had produced its 6 millionth vehicle. Now, I did mention this, I think it was on Friday night or Saturday morning. Anyway, Tesla talked about they've just made their 6 millionth vehicle, and all of a sudden, Tri-Teslike and AJ both changed their estimates for the month. It says, given all the past production and sales numbers that Tesla releases each quarter, the EV giant likely produced 440,000 units in the first quarter through March 29th. Then you add the 30th and the 31st, Tesla might have produced 450,000 units in the first quarter. It says production, of course, isn't sales, and there's typically a gap between production and sales. And it said lately that gap has averaged around 15,000 units a quarter. In other words, a bigger and bigger gap. Well, that isn't necessarily true, but that's what they're using for this analysis. So they say a reasonable and conservative first quarter estimate based on the tweet is somewhere between 425 and 435,000 units. Now, that is only a guess. Inventories could have grown in the quarter or fallen in the quarter. Still, the tweet offers investors another way to think about the quarterly number on April 2nd. Something around 430,000 units should be good enough to boost the stock, they think at Barron's. Tesla shares had a lousy first quarter, falling almost 30%, making the worst performer in the S&P 500. The 430,000 figure would also mean year-over-year growth. If you get to 430,000, it would be more than last year, I think 423.5, I think. Tesla hasn't posted lower unit sales from 1 year prior since the second quarter of 2020, and that was because of the pandemic. There are very few estimates coming from the regular estimators right now. This is me talking now, not them. This is Barron's article's over. Anyway, the regular guys, I started last quarter. I said, I'm not going to do this anymore. I'm not going to play this game. I might still play the game with regard to the earnings call. We'll see. I'll make that decision in the next couple of weeks. But with regard to picking these numbers, you've got AJ and Troy doing all this work. I'm not going to duplicate that work. And pretty much everybody else at this point, I think they're dropping out. They've kind of followed my lead, and they're kind of dropping out of making their estimates because all they would be doing now is deciding whether they like Troy's work or AJ's better, and then maybe rounding up or rounding down or increasing because they think they know something that one of them doesn't. I mean, for instance, I even mentioned the other day, I think both of them are off on the Cybertruck numbers, but that could be wrong too. I don't know because I'm only going off of Joe's, the things that Joe has been talking about, and others that are estimating that that they're up to 1,000 a week right now. Anyway, you pick your number, I'll pick my number. Barron's believes if we get to 4:30 that we're okay on Tuesday. What will happen tomorrow, though, is anybody's guess. I certainly wouldn't be buying or selling first thing in the morning tomorrow. Okay, so, and that's not investment advice. Okay, let's start with what's going to be going on Monday. So much going on this week. Not only the Tesla numbers on Tuesday, believe me, that's only a piece of what's going on. Let's start with Monday. We won't be able to report this until Monday night, but the S&P U.S. manufacturing PMI final, they've given us the preliminary, now they're going to finalize it, it came in on the preliminary at 52.5. They're saying the estimates of the folks that are polled, and I'm not going to say that every time, the polling estimates are that it'll stay the same, 52.5. That would be over 50%, or over 50 rather, which means it's a positive for U.S. manufacturing. Construction spending was down 2%. I'm sorry, 0.2% last month. They're thinking it'll be up 0.7. That could have a lot to do with seasonal issues, a lot of snow in January, a lot of rain, snow, all kinds of stuff that stopped construction in January and probably popping back up in February. That makes total sense. ISM manufacturing, they're saying last month it was 47.8 and they're expecting it to come up 48.1. If that's true, we have been seeing now general evidence of manufacturing picking up a bit. Then the first of, I think it's like 10 different Fed governors and Fed presidents speaking all over the place. That is never a good thing. Okay, once in a while it is, but I don't think it's going to be right now, especially when we had Fed speak over the weekend, or I guess it was on Friday or Saturday. Maybe it was even, anyway, what we heard over the weekend, the most recent Fed speak we've heard has been, there's no reason we can't stay higher for even longer. So then on Tuesday, we have factory orders at too late for my show, so those will be on Tuesday night. Factory orders, which were negative 3.6 last month, they're expecting to be positive 1. So there's another good news piece, hopefully for the for the manufacturing folks. And then job openings comes in, and last month it was 8.9 million. The polling is at 8.8 million. I wouldn't be surprised to see this fall more. I think I don't think anyway. That's what I'm guessing. I'm saying that the job openings come in lower than 8.8 million. All right, then we got a bunch of Fed speakers, and then at some point on Tuesday-ish, the various U.S. auto sales besides Tesla will also come in. General Motors, Ford, I think Stellantis is usually later. But anyway, we'll see other U.S. auto sales numbers coming in. Wednesday, we start off in the morning with ADP employment. And last month it was up 140,000. This month they are estimating 158,000. So a very substantial increase over last month. We'll wait and see. I don't have a guess on that. S&P U.S. services. Okay, so now that earlier we were talking about the goods, now we're talking about services. And this is also the final number. Here again, it came in last month at 51.7, and it is expected to stay the same at 51.7. More Fed speakers, then we have ISM services numbers coming in at 10 o'clock. So that'll be for Wednesday night with Jeff Lutz. 52.6 was the original number. I mean, it was the number last month. They're expecting that to be flat. So services flat, where services have tended to be going up. All right, Thursday, starting to get more and more exciting here. On Thursday, we have initial jobless claims. They're saying flat. Last month, 210,000. This month, 210,000. They never get this right. So I have no idea. What would I think? What do I think is going to start? I think we're going to start to see more initial jobless claims. So let's see if I get it right, that the trend is going to be a loosening labor market, more layoffs, more jobless. We'll talk about this more in a minute because we talk about Friday. Yeah, that's what I think is going to happen. So fewer openings, et cetera. U.S. trade balance last month was a negative 67. There, boy, all the estimates this month are just flat. So they think the trade balance is going to come in at negative 67.4 again. And then 7 million more Fed speakers. And then we get to Friday. Friday's the biggie. We have the U.S. non-farm payrolls. Last month came in at 275. This month, they're thinking it will be only 200,000. What I'm going to be looking for, what I recommend that you look for, and what I recommend you come in on Friday morning and we'll talk about it, is what are the revisions from December and January? So the December number's already been revised dramatically down. The January number came in way stronger than anybody expected at 275. I think this 200,000 number is nuts for where the economy is right now. So I would expect the 275 to the December number maybe revised down even further, the 275 from January to be revised down, and the 200,000 from February. That could be the number, but in the future, it'll be revised down. Also, we're going to be looking for how many of these are new jobs, how many of these jobs are not government jobs. We're going to be looking for how many hours are employees working right now. We're going to be looking for part-time versus full-time. All those kind of things, I think, should be on this list as opposed to just this. Then you've got the U.S. unemployment rate. Last month, it popped up to 3.9. Those who voted said they think it's going to drop back down to 3.8. Anything is possible. I think that would be a surprise to me. I think it might even go up to 4.0 or stay at 3.9. U.S. hourly wages, last month they went up 0.4%. They're predicting 0.3%. Yeah, that makes sense to me. Hourly wages year over year, 4.1% last month for the year over year. They're saying that'll stay the same. Might come down a bit, but I don't know. I'm just guessing, of course. And then after another bunch of folks, presidents and governors and whatnot speak, then we have consumer credit numbers coming in. Last month, it was popped up 19.5 billion. The people polled say they think it's only going to go up 12.5 billion this month. I can't picture the chart in my head right now, but I know that consumer credit's been growing rapidly. And there's probably going to need to be a moment where that starts to pause. All right. In addition to that, I did look up the trucking tonnage because I saw a headline where another big trucker has filed for Chapter 11. Pride is the name of the company. They had 20,000 trucks, and they just said, hey, look, there's too many trucks on the road right now, and we can't make it. They had been perfectly fine until the pandemic, they said, making money hand over fist. But during the pandemic, they added a bunch of trucks because that's what everybody did after the pandemic. Everybody had added all this capacity, and there was not enough jobs to take care, not enough need for all that capacity. So lots of smaller companies have already gone under. Now, a second after Yellow, we've now got Pride following Yellow, much smaller company, but still 20,000 trucks. The American Trucking Association said that their seasonally adjusted for-hire truck tonnage increased by 4.3% in February after going down 3.2% in January. The index equaled 116, which the norm at 100, and compared to 111 in January. This was probably because, again, of all that weather in the West and Midwest. So after a soft January, in part due to winter storms, truck tonnage snapped back in February. According to Chief Economist Bob Costello, February level was the highest in a year, but the index still contracted compared to a year earlier, suggesting that truck tonnage remains in a recession, which that would be, I believe, 19 months of recession. January's decrease was revised up a little bit from our February 20 press release. Compared with February 2023, the index fell 1.4, which was the 12th straight year-over-year decline. In January, the index was down 4.5 from a year earlier. So where are the markets now on a Sunday night? We have got the pre-market. Let's start with equities. Equities here, we've got up 100. The Dow is up 166, which is 0.41%. We've got the S&P up 23.5, which is up 0.44%. And we've got the NASDAQ up even more on a percentage basis, up 128 points, which is 0.71%. So things are looking good in terms of the general equities market for tomorrow morning. Now, sometimes that's because bonds are down. Well, they're down, but only a tiny bit. The 10-year is down 0.3 of 1 basis point. And if we look at the rest here, we've got all of the longs are down. Even the 2-year is down 1.2%, bringing it back closer to 40 basis points for the total. But we got the US 2-month up almost a full basis point. So that remains about 1.2. I'm sorry, about 120 basis points. I always got to get those zeros in the right places and the decimals all arranged correctly. Okay, let's look at oil. We have got oil this evening is down 4 cents on the West Texas Intermediate. We have got Brent down 9 cents, but somewhere along the line, the Brent and Texas Intermediate number has now shrunk again between the two. So it's only $3.78 between them right now. So that's way down. It was almost $5 on Friday. So I don't know why anyway, sometimes I don't understand when they're marking these things up. And by the way, the oil price, 83 West Texas Intermediate, $83.13. That's like really high. And pretty much I continue to read article after article after article suggesting we're just going higher. Natural gas down 2.33% at $1.72. So it continues to be very soft. The dollar is gaining. The dollar is doing okay. It's always impossible. Can I say that I usually use the headline on this, just whatever the headline is telling me, because, it can be up against the Japanese yen and down against the Mexican, I should know that, peso, and up against the euro and down against the British pound. I mean, so you got these baskets of currencies and the different baskets can be up or down. So it's really, I usually just use the headline to say, so that's why I don't give you a number. The dollar is gaining, it says. So we've got gold up $25 at $22.63. I believe that is yet another all-time high. I could be wrong. Maybe I can tell you real quick if that's true or not. It's taken too long to figure it out. Gold, yep, record highs again. So gold continues to go crazy. I did a lot of conversation about that the other day. You've got sovereign nations that are buying gold like crazy. Their central reserves are buying gold right now. And that there's a lot of room for them to keep buying more. So that this gold rush right now doesn't seem to be in any danger of slacking off like it did a couple of months ago. Copper is up 1.35%, still over $4 at $4.06. You have got the Bitcoin up 1,347 at 71,252. Make of that what you will. Okay, well, that's all we've got for the markets. Tomorrow morning, we will have Brian White on at the usual time. We are lining up some amazing fun stories for you tomorrow. And then tomorrow night, I'll be all by myself on Good News Monday. Larry will be sitting in a jet somewhere over the Atlantic Ocean. He promises to be with us, though, on Friday from Gay Paris. he promises he'll show up. Anyway, I'd love to get some love over on Patreon. That would be really good. You could join Patreon. Just go on down below in the description and hit up for $3, $5, or $10. And it tells you right in the description below what you're going to get if you join at the $5 or $10 level. And then yesterday, I did a video about the new Tesla narrative. You know, Tesla's a story stock, and the narrative is all that matters with Tesla. Well, not all that matters. Execution matters too. Hitting your numbers matters. The overall market matters. That's what we talk about in the show all the time. The overall market, the overall economy, the overall Tesla, the fundamentals of Tesla, and we even take a look sometimes at the technicals. But Tesla is a story stock. Maybe the most important, the biggest, most crazy story stock of all time. In fact, I think we could say that without doubt. When you start talking about the potential, as we did above for RoboTaxi and the potential for the Optimus bot, it's the most incredible story stock of all time. So the narrative should be shifting again. I think it's starting to shift, and I went into great detail about what that shift might look like on that video yesterday, and I will put the card right there in case you might have missed it. Anyway, that's all I got on this Easter Sunday night. I hope you had a lovely Easter Sunday and that you went and did all the things that you normally do on Easter and kept those traditions alive. And it's been great talking to you tonight.